In this video, we combine two analyses: profit if manual stop before take profit, and percentage of trade stop early in profit. Together, these two analyses provide some powerful insight into your trading behavior. When you want to assess whether your manual trade closing is actually yielding a better payoff for you compared to if you would have left the trade run without interference. You may have oftentimes kept checking a trade after you manually close it and thought, you should have better kept the position. This analysis gives you a structured overview on whether a manual trade closing when the trade is in profit really weakens your performance. The Hoc-trade analytics simulates what would have been the trade payoff in case you would have not closed the position. Moreover, it also gives additional insight to the situation in which you are more likely to stop a trade early in profit. A loss trade is completely normal in trading. Everyone will have them. And people who try to avoid loss trade at all costs will not succeed in trading. Once traders realize that loss trades are as much part of trading as winning trades are, the focus shifts toward earning as much as possible from winning trades and losing as few as possible from lost trades. Being able to benefit as much as possible from winning trades sounds easier than it is. For me, a loss trade in which I lost 20 pips is much less of a problem than a winning trade in which I made 10 pips. However, I closed the trade earlier because I was afraid to lose my profit again. My original setup was aiming to make 30 pips with the trade, and seeing the chart after trade closing, I see that the trade would have reached my take profit level. I know losing trades are part of the game, and I can handle that in my strategy. However, if I'm not able to benefit enough from my winning trades, I will not be able to trade profitable. A trading strategy in which the trader has a 50% hit rate, 20 pips of stop loss, and 30 pips of take profit sounds very profitable. However, if the trader always closes winning trade after 10 pips, the trading strategy becomes very unprofitable, even if slightly increasing the hit rate. With only a take profit of 10 pips, while having the stop loss of 20 pips, 66.6% of all trades need to be profitable trades just to break even. Of course, there are situations in which closing a trade early in profit makes sense. If you do not believe in the trade setup anymore because something has changed, in case you need to leave the computer, and there are many other reasons. However, I'm talking about the general behavior here, not special situations. How you're losing trades early and let your winning trades run. It is the basic rule of trading. However, one of the hardest to really implement and sustain. Not being able to let winning trades run can have many factors and can be very individual for traders. One factor we oftentimes see is that traders are not fully convinced of their trading strategy. Either they have never been, or they lost their belief due to a long list of losing trades. Even when mostly being in an emotional state, which allows to make rational decisions, there are certain times in which it is harder for traders to make rational decisions. Those situations are oftentimes triggered through bad experience, such as previous lost trades, which challenge the patience and the belief of the trader. It is quite common to observe that traders are more likely to close their profitable trades manually before reaching the take profit in case they had a range of lost trade beforehand. Do you share a similar pattern as just described? In order to be able to interpret the data presented to you, let's have a look in the output chart. Looking at the output chart for the analysis, profit if manual stop before take profit, we see two bars showing the average payoff either in pips or in return. The one bar shows the average payoff in case the trade was manually closed in profit before reaching the take profit level. All trades which were manually closed yield some profit, and in which a take profit and a stop loss was specified account into this category. In the second bar, the analysis measures the average payoff in case this trade would not have been closed manually, but that run until it either reached its stop loss or take profit level. Our analytics simulate the trade payoff with the real price quote after you close the trade. For the trade at hand, we see that the payoff from trades which were closed manually is slightly below the payoff in case those trades would not have been closed manually. This means that this trader would have had a better payoff in case he or she had not interfered with the trade. Closely related is also another analysis. The analysis on percentage of trade closed early in profit reveals your average number of trades which are closed early in profit. This percentage you can see in the first bar here. Moreover, this number is compared to the percentage of trades you closed early in profit in case you had a lost trade just beforehand, which can be seen in the second bar. You can also compare your output with profitable traders that share a similar trading style to yours as presented here in the line benchmark. If you do encounter that you actually have a worse payoff if you manually close a trade, and trust me, you are by far not the only one, it is very important to understand why this is the case. Traders oftentimes tend to overthink their decision, make very detailed plans, and constantly reassess the situation. Reassessing a situation is good. However, in the reassessment, we let ourselves oftentimes influenced by emotions even more. If we have an open position, many of us constantly monitor the chart and the price. For every movement, we try to have an interpretation, and every movement can have an influence on our emotional state. This is not only exhausting, it is also lowering our rational decision-making ability over time. Moreover, compared to the trade opening situation, we do not have much time now during the trade. Every second, the price moves and we see our profit either grow or shrink. This adds another layer of pressure to our emotional state. I'm sure many of you started trading on a demo account. Did you ever wonder how you would perform now on a demo account? Do you think you will perform better or worse compared to your live account? I can only encourage you to keep trading on a demo account as well, as this will reduce much of the emotional stress we face during trading. You will see very well in the Hoc-trade analytics where you actually perform much better using a demo account versus a live account. You will have to find ways to improve your decision-making throughout the whole trade cycle, from initial analysis, trade opening, trade monitoring, and trade closing. Actually, even one step further, also during trade review. An additional help for this can come from the analysis on the percentage of trades closed early. You can easily check whether you are more likely to manually close a trade in profit if you had a lost trade beforehand. Once accepting lost trades as part of trading, you will strongly increase your ability to make optimal decisions even after facing a series of lost trades. In case you do have a significant lower payoff due to manually closing trades early in profit, you may choose to receive a notification from us, warning that you have just manually closed another position early in profit, which on average yields you lower performance. Trading can be very demanding, and a little technical support may actually help to free your mind and focus better.